Today we are talking about our old friend Elastos, the crypto that everybody was super excited about in 2018. In fact, it was basically the it coin among the cool crowd anyway. But oh, has it fallen so far from grace, and the bear has bit it deeply. But was that bear bite fatal? Let's see what Elastos has been up to over the last month since we looked in. Now let's start with the biggest updates. Elastos has launched the delegated proof of stake component of their hybrid consensus model. As a reminder, the hybrid consensus model is made up of both auxiliary proof of work and delegated proof of stake. So in this system, blocks are made by Bitcoin miners who merge mine Bitcoin with Elastos. However, delegated proof of stake supernodes then sign the blocks in order to give finality before the Bitcoin miners actually broadcast the block to the blockchain. Elastos has now opened up merged mining to the public after successful testing by BTC.com's mining pool. Elastos is essentially proving the viability of their hybrid consensus model in real world action right now, which may give us a solution that actually provides both scalability and security to a high degree. Merged mining is awesome as it uses the combined hash power and security of the various Bitcoin mining pools with no additional cost to the miners. So they basically sign up and get extra free money. And the hash rate of Elastos has risen dramatically since merged mining started and has made the chain very secure. Meanwhile, the delegated proof of stake part of the Elastos hybrid consensus allows for the enhanced performance of the blockchain, and in addition, the side chains provide high levels of scalability. Now, with this hybrid model, Elastos is aiming to combine the best of both worlds. If successful, Elastos in achieving scalability and performance, of course without trying to compromise on security, will be a great step forward for the Elastos chain and for the crypto economy overall. Now, to aid in the support of the delegated proof of stake network, Elastos is launching a new Elastos wallet with supernode election support built in to make the process very easy. With this new development, supernode voting is live and node owners are able to deploy their nodes. Deploy the nodes! So Lark, just how many of these super nodes are there? Well, the community-run delegated proof of stake super nodes, there'll be 36 active and 72 standby super nodes. The ELA token will be used to vote for those delegated proof of stake nodes, so there should indeed be a great driver for token holders in terms of the nodes, of course, sharing revenue and people wanting to vote for and to stake, and really providing an incentive for Elastos holders to go out and participate in the network, and thus a reason to hold ELA, as well as, of course, the other token uses like, the unfun stuff like paying for infrastructure services, and of course paying for digital IDs, which will be highly relevant as that's a big focus of Elastos, but getting paid, everybody likes that. Also, there are no gas fees as nodes are rewarded with a 4% annual inflation rate, much like with EOS. Then there are the side chains, which will be a very important part of what Elastos is building. The Ethereum sidechain, for example, will essentially bring in the functionality of Ethereum, but with delegated proof of stake. Basically, it is a redefined Ethereum virtual machine which uses the Elastos delegated proof of stake supernodes to jack the speed all the way up to 1,500 transactions per second. It is compatible with Solidity smart contracts, and the Elastos EVM will continually be updated in order to allow for full backwards compatibility with Solidity smart contracts. A Neo smart contract compatible sidechain is also going to be going live in Q2, and will be bringing similar compatibility as what we see with Ethereum, which, while cool, is considerably less important as let's keep it real, guys. Not that much is built on Neo these days, especially compared to Ethereum. But increased portability is a good thing across chains without a doubt, and token sidechains themselves are also going to be kicking off in Q2 of this year, which all combined is creating a very welcoming atmosphere for developers. Next up, we have the Elastos carrier. 870,000 units containing Elastos carrier were shipped in 2018. Nearly 400,000 are online, almost all of those in China, which is nice, but the actual value these will create for the network, well, let's try to understand why the carriers are actually so important in the first place. Right now, the internet works in a way where traffic is routed to centralized servers first, and of course, since those centralized servers know which user's traffic is which, it allows for all that fun kind of stuff like censorship or data theft quite easily, actually. However, traffic on the carriers, the Elastos carriers, is different as the data is routed peer-to-peer in a very unpredictable way through relays, making it nearly impossible to intercept that data. And even if they did, the data is encrypted and can only be read by the user with the right private key. So to answer the question, what value do the Elastos carriers actually bring to the ecosystem? Well, just the power of privacy and decentralization on a massive scale. No biggie, really, when you think about it. Now, a farther piece of infrastructure is the Elastos browser, which is called Trinity. What's up with all the new references, guys? Now, the browser acts as a virtual machine, so each dApp opened within it has the process and network isolation. So when you close the app in Trinity, it automatically destroys the virtual machine, and when that happens, it also destroys any possible viruses or malicious code that might have been gained from that, since the dApp runtime exists separately from the device's operating system. The virus is then unable to reach the device and to do any harm. This is not only cool, but also very, very powerful. Now, the dApps themselves also have no direct access to the internet and only talk to the outside world via the carriers. Authentication and trust are established using DIDs, which are stored, of course, on chain. Then there is the so-called Manhattan Project, which is basically a fund that aims to support dApp development projects for Elastos. Now, the Manhattan Project is currently being funded by just a few people. Jihan Wu of Bitmain, the CEO of Huobi, the former co-founder of Neo, and the founder of the Newton Project. Now, all of them have given ELA to this fund in order to support dApp development projects for Elastos. And in order to prevent the dumping of these people's ELA on the markets by the funded projects, they're not actually giving them the ELA. The plan is that the projects will receive USDT for the actual funding while locking up an equivalent amount of Elastos for 3 years. And hey, look, okay, that sounds nice, but it does need to compete with the likes of Tron and EOS that have laser-focused teams and deep pockets. And in terms of incubator programs, it really needs to be honest, to step up its game a little bit here. But at the same time, it's not bad. So let's give it that. Now, looking now at some of the big partners and the progress with them, and some new announcements, of course, along the way here too. The first is Top Network, which will be offered as an alternative peer-to-peer infrastructure to the Elastos carrier. Basically, Top Network gives a similar underlying network for secure dApps to live in the Elastos Top Network ecosystem. While this is most likely going to be a more business-facing partnership, the relationship with Top does open up 50 million people that are going to be being transferred to a decentralized network. So that's kind of cool. Then we have ViewChain, which is envisaged to be the first project to truly showcase just how Elastos can leverage the decentralized peer-to-peer network it is building with the power of its sidechains. Additionally, it is expected that ViewChain will bring copious amounts of new users into the crypto ecosystem. The goal is to onboard 1 million d.tube users in Myanmar via the Zapier peer-to-peer content sharing network. There are a total of 576 million users available to be onboarded with ViewChain. So, that's kind of a substantial partnership. And then next we have IOX. So IOX and Cube and Elastos are jointly developing a TV with blockchain applications built in, which is pretty damn cool. Now the partners have announced the cooperation in the development of the world's first series of TV products called Q Money TV. The rather awesomely named Q Money TV will contain blockchain integrated decentralized applications, which is pretty awesome. Now, Q Money TV is built upon the Android TV platform, and this is the real kicker that users will be able to participate in mining as well as earn rewards by using Q Money TV products just for watching television. Get paid to watch TV, guys. It's great. The world will never be the same again. When and if this takes off, of course. Together, IOX and Cube are developing apps like QShare, which lets users use the Q Money TV as a private cloud. They have QChat, which is a decentralized application that lets users chat privately with friends in a peer-to-peer way. And a couple other things they're working on too, and that's all cool. And this is just the first of many planned apps that we will see being coming to Q Money TV. But where does Elastos fit into all this? Well, IOX will also be implementing the d.tube functions of Elastos into the Q Money TV series of products so that users can utilize decentralized accounts to better protect their personal privacy. Awesome. In addition to this, IOX and Elastos are also working together on a voting platform that uses IOX's blockchain-based electoral solutions along with Elastos's d.tube. In this case, d.tube isn't just about establishing ownership of personal data, but is also about, of course, expressing that vote authenticity. One of the most recent announcements from Elastos comes from a big source, actually, and this is a really cool partnership, the World Bank. The cooperation between the World Bank and Elastos is focused on medical big data computation specifically for developing countries, which actually started back on April 8th. Wow, that's really cool. It's actually a really, really big partnership, and to be honest, a problem of epic proportions. And the fact that the World Bank chose Elastos over all the other projects really says a lot about what Elastos is developing. And of course, any video on Elastos would be incomplete without mentioning the Cyber Republic. Now, the Cyber Republic is something like the city council overseeing the Elastos public utility, at least that's how they describe it, which is scheduled to be handed over fully to the community, who will thereafter be in charge of governing the Elastos platform in Q3 of this year. Now, I think that the Cyber Republic will likely be, to be honest, the factor which will make or break Elastos in the long term. It will be a super key piece of Elastos infrastructure. Oh, and by the way, the Cyber Republic has been funded with 16 million Elastos. The staking rewards alone should ensure a good long-term stability of the ecosystem. Via the Cyber Republic, the community has the power to elect and fund projects which they deem to be beneficial to the Elastos ecosystem. And it is already being used for proposals and suggestions with projects that have already been funded to the tune of around $100,000. The plan is to elect a new council for the Cyber Republic by August 2019, and thus the community-run Cyber Republic will officially be launched. Any member of the community can be a candidate. So if you are a real Elastos nut, get involved. Seriously, could be an awesome opportunity if you are a real Elastos fan. Okay, so look, all of that is great, but let's keep it real. Elastos has had a tough time since I last talked about it in a proper video. The market situation did get the best of many projects, and while a $2 Elastos was kind of cool, well, for me, kind of. I mean, hey, DCA all day, right, guys? Just keep ignoring that eye-watering drop. Look, and I know a few of you guys out there feel the same way about this. It's good and it's bad, but it's hard to gloss over that it has been a tough ride for the community, with some previous absolute die-hard enthusiasts slowly losing faith in Elastos. And crypto winter has been tough for most. But Elastos had some things like a surprise token unlock, which brought a premature end to its token lockup program, with founder Rong Chen citing the potential for it to be deemed out of sync with Western compliance. Now, this was a move that was much reviled by the community, as of course you can imagine, and for good reason, because people had been promised one thing and then had it taken away from them. Never a good move, and definitely not cool. But this is one move which may actually end up being a good and important move in the long term, even if it is a short-term kind of pain, if it does actually increase compliance for things like getting listed on Western exchanges, even though there is still no indication of new exchange listings, especially not exchange listings on Western exchanges, which frustrates so many community members while they sit back and watch Justin Sun out there bragging on a near daily basis about Tron being listed on some new exchange somewhere. Elastos is not. And if the low liquidity didn't piss you off, then there also does not appear to be any new airdrops on the horizon, leading some people to speculate that airdrops have also been canceled due to regulatory fears. Also, the team, in typical fashion of so many crypto projects, kind of sucked at communicating at the most critical time they needed to communicate. And communication is so important. It is a key mistake that so many projects make, and it is incredibly hard to rebuild a broken community. Elastos definitely needs better PR. But if you expect that situation to improve, then please do not hold your breath, as Rong Chen will be the first to tell you that it is not a priority. However, there's a silver lining in the cloud, at least here, that the Cyber Republic may finally be breaking that mold by doing things like weekly reports, which are so refreshing, and that they are really taking charge as the directing force of the ecosystem, which is something that was desperately needed. Also, many in the community want to see this driving force, which the Cyber Republic might be, but the idea of a CEO has been floated and rejected by Rong Chen. He has said that he sees Elastos more as a public utility, not as a market product which needs a CEO. And in a separate statement, that projects built on Elastos should market themselves, and as a side effect, will indirectly market for Elastos. Da fook is that, guys? Seriously, look at how powerful the Ethereum Enterprise Alliance has been. Just think about that. That didn't just magically happen. That took real effort to build. There does need to be a body with a laser focus on bringing businesses in to build dApps on Elastos by focusing on actually trying to incentivize builders to come and build. Now, what Elastos has actually done, to be honest, a really great job of getting big partners and building great tech under the leadership of Rong Chen. Times are changing. The new era of people who are not developers running the ecosystem could be a real positive step for the overall development of Elastos as the Cyber Republic takes over the show, allowing the developers, like Rong, to continue focusing on creating a new internet, while the governing body focuses on, bringing in new developers, bringing in new businesses, new dApps, and of course provides that kind of strong leadership and discipline to make the Elastos vision into a reality. Look, I still hold Elastos, and I honestly don't have any plans on selling my Elastos, and while many in the community have felt the pain of watching their investment crumble before their eyes, which is never fun, Elastos is growing. even if it is slow, and even if it's not always what we want. The Cyber Republic, I think, will be an incredibly positive force in the Elastos ecosystem, especially when it is handed over to the community and responds directly to the community and is the community. And we need more builders, and we need more valuable business relationships, and all this is possible. And it's happening. But mistakes have been made. The question is how Elastos moves forward, and I think there's still so much promise to this project, which is why I'm not selling. Anyway, but you guys let me know your thoughts on Elastos down below in the comments section. I'd be really keen to hear all your thoughts. I know that Elastos is one we haven't talked about as much in a while, so definitely share your concerns, share your questions. I probably can't answer most of them, but I'm very curious to read them anyway. Also, if you guys have not checked out Cryptocurrency Explained yet, it is a free 5-hour course designed for beginners. Tell your friends, tell your family, tell your postman, tell everybody. Go to thecryptolark.org, or you can just check it out in this playlist over here. Thank you so much for watching. If you did enjoy this video, leave a thumbs up on it. You can also subscribe to the channel if you are new around here. Long live the blockchain, and peace out till next time.